What's up, guys? Welcome back to lesson 2. This is John Hart. If you are new with the channel, welcome. Please don't forget to subscribe and smash that like button because the algorithm like it. All right, well, my name is John. I am basically recording this as part of um, giving some knowledge or sharing some knowledge basically to some of you that interested with trading on the stock market. And today we're going to talk about lesson number 2. So lesson number 2 is basically how to make money, and especially in knowing the market is overbought or oversold condition. We're going to learn a couple of indicator, and also that's something that you can also take a look and follow along with me. So without further ado, we're going to go into the chart. I'm going to try to make it short, less than 20 minutes on the video, so you guys can follow along faster rather than lengthy one. So all right, so without further ado, let's share the screen here, and where you guys will see, let's go to XPX. I'm gonna blow this thing bigger so you guys can see it closer. um, Before we do that, we're gonna also annotate that. Okay. All right, so one thing that we use, I personally use, that I look at this RSI. Okay, RSI basically above 70, it's bearish. I'm sorry, it's bullish, and RSI below 30 is bearish. Like for this condition, right? That is oversold, that is overbought. Okay, oversold, and you can see a bounce happen. Overbought, you will see a sell-off there, right? This is also some of the thing that you can see. Now, are they 100% accurate? No, they are not. However, it's something that I um, look once a while, and just kind of looking at how the market behave, especially with this condition right here. You can see that testing 30 again, testing 30, and then it just rally up. As you can see, the market basically tank from here, right? Keep tanking, and then after that find the bottom and it start rally up, right? Now, as you can see, pull back and then rally again. As you guys can see, we are looking this, there is no 100% correct answer how to read this. However, this will help you a lot. Just kind of thinking this way. Okay, if you know the market is oversold, you probably want to start piling up your position. um, some hedge fund or maybe some investor or trader that start putting between 10 to 25% to 50% or maybe close to 75%, right? Then the market basically start rallying up in this situation. If we're looking at in this, right, in this level, then you can think like, hey, this is 10%, and then after that, when it go down again, you start piling up again another 20%, right? And then when it start going down again to whatever the level that you comfortable with is 50%, right? As the market start bounce, and that basically, hey, this stock, it's making lower high, so technically there's a potential keep moving forward. Then you basically adding more and more and more. Now, looking at this, right, now market basically start peaking, it start showing overbought. Then that's where probably that you want to start selling some of the position, because hey, the market is start overbought. Now keep in mind, this is for traders, right? You want to be in and out in certain market position. If you're an investor, you don't really worry about what the chart tell you, unless you want to learn technical analysis and you want to get into the stock with the cheaper or the correct price. Okay, so that is one of the thing that I want to mention, that in here, this is where the people basically start thinking like, hey, market is overbought, let's start scaling down. So let's say you have a 75% position, and then 25% cash, then you start bringing down that 75 become 40% or maybe become 30%. Then when the market basically start pulling back right here and it's holding that 200 MA and it bouncing back again, right, you know that you have that position with this golden cross as well, that you can start buying the position in the cheaper level, you know, comparing to this, right? This is a little bit on the 3200. Now you can buy it at 3000, so which is 200, you know, position differences between two. Now that's kind of one of the strategy that you can like take a look as well. So RSI, and also another thing that I want to mention is also the MACD. Now MACD, it is a delay, a lagging indicator, but it's a very very good indicator, especially when it start moving, crossing like this. Okay, you will see that there's some position, like for example like this, you can tell that is basically the same with that. Now we are in a very very close to overbought position, I can tell you that. RSI is almost 70, but we are basically sideways, so we don't know what's going to happen next. Now this is where, like I mentioned, this is where the position that you want to kind of scale down from, you know, from whatever the position that you have larger to a little bit smaller, because you don't know what's going to happen next, if it's going up or going down. Okay, so I'm going to close this, and then we're going to reopen again because there's so many data here. Now the other thing that I want to mention too, you can also learn about Fibonacci, right? If the market basically, let's say we're looking at these 3380 is the peak for the top. Now you can use this Fibonacci pulling from the last low to the 3380, which is right now, and you can see, like, let's say if the market pull back, right, there's a bad news happen and yada yada, you can also see these are the level that you can also look between. um, you guys can also see this is the support, right? It used to be a resistance, but now it's a support. If you guys haven't watched the last video, I talk about lesson number 1. The basic of technical analysis is the basic support and resistance. So this is where you're gonna also learn, right? Another one is support and support. They all really correlate together, right? This is used to be resistance, now is support. So everything is like 30, 38.2, 50%, and 6.8. Those are the level, let's say, if the market pull back, then this is where the level that you can start nibbling and start, you know, building up your position. 38.2, 50%, and 61, because there's a potential bounce again if the market basically want to showing up some strength again, and there's some buyers coming up with position. So those are the things that I use. The other thing that I also use is called Fibonacci fan. You also find this very helpful. I like to use this with the last bottom and high. As you can see right there, you can tell, hey, it's been trying to do that, and then we just have to see finding where's the next resistance level from there. um, Let me also draw the other one here, see if I can match them together. So that's also the other one that you can also use in your drawing, right? Considering those are the resistant. So so what is the bottom line here? We learn about RSI. RSI is great. it's not 100% accurate, but it's a great indicator to know when the market is overbought. This work on any stock. Okay, in this example I pull XPX. Now you also want to look at the MACD. Okay, MACD is lagging, however it will tell you a good indicator if there's going to be some turning point from there. The third one that I use a lot is it's Fibonacci, okay, and then also Fibonacci fan. So those are the things that you want to take a look. Now I also want to show a couple things as well that I use a lot. Indicator goes to here and then go to William R. Okay, I like William R. You can always playing around with this change, right? The parameter. This is 12 days, 9 days, and then the one as default is 14 days for William R. Now you can also look at this. William R has been telling us many times, okay, that the market has been punching very overbought. Of course, with the whole market, with this, you gotta have to take a look at the bigger picture. See, it's overbought, 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 right? There's small pullback there, and then if it's below, close to the 80 or around below the 50, then you know there's a bounce coming up right there, okay. Um, and then if it's above, then it's sideways. There's nothing happen. I mean, it's technically just the market um, want to grind higher because the Fed money it's keep coming. So I also look at William R a lot. You can also change this to weekly with that indicator, then it will tell you a better idea, right? On daily, we are almost overbought, but on weekly, we still have some room basically. And there's a lot of people thinking that we're gonna break this 52 weeks high and we're gonna keep going higher, like what Nasdaq did. Um, and William R looking at really super overbought, and the MACD it still doesn't show any sign of pullback yet. If you look at this way, right? If you want to go short, then you're gonna start really seeing this guy is gonna missing a turn from there, right? It's gonna kind of curving down a little bit. Um, yeah, so that's kind of the idea of what I'm seeing from the whole market as well. So I'm gonna make it sweet and short. I hope you guys learn from this indicator, something that you wanna include it in your research every single day before you make a decision what you want to do. You want to go long, you want to go short. Um, so that's kind of the idea of this whole lesson number 2. So if you are new, welcome and thank you for watching this. And also, if you haven't subscribed, click the subscribe button and also click the smash like. Thanks, guys, and I'll see you guys on the lesson 3.